Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 sports betting companies. Now, online sports betting has been a growing trend over these last couple of years and recently took a big step forward as New York became the most recent state to legalize online sports betting. So today we're looking at 3 stocks in that sector that analysts think have some strong growth potential ahead. And just before we get into those 3 stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out the links in our description where you can download the TipRanks mobile app on your Android or Apple device to stay up to date with all of the market news and analyst ratings on the go. With that being said, let's get right into these sports betting companies, starting off with Penn National Gaming. They trade under the ticker PENN and are currently priced just above $91 per share. On the TipRanks Smart Score, they come in with an outperform rating with a 9 out of 10. This is based on very bullish news sentiment and very positive TipRanks investor sentiment as well. Penn National Gaming owns, operates, or has ownership interests in 41 gaming and racing properties in 19 states and video gaming terminal operations with a focus on slot machine entertainment. They also offer live sports betting at multiple of their properties. The company's strategy has continued to evolve from an owner and management of gaming and racing properties into an omni-channel provider of retail and online gaming, live racing, and sports betting entertainment. In 2020, the company acquired 36% equity interest in Barstool Sports, a leading digital sports, entertainment, lifestyle, and media company. Penn National Gaming launched its Barstool Sportsbook app and products in Pennsylvania, Michigan, and Illinois, allowing it to leverage the Barstool brand and marketing engine to drive meaningful market share as the product is introduced across their leading customer loyalty program, My Choice, with over 20 million casino customers and Barstool's audience of over 66 million loyal fans. They introduced their new iCasino product to Michigan on February 1st, and the product is positioned to capture meaningful cross-sell from the Barstool Sportsbook as well as from their 20 million My Choice database. In its first 2 days of operation, the Barstool iCasino converted nearly 15% of Michigan sportsbook customers. The strength of their balance sheet provides them with financial flexibility to capitalize on high-growth opportunities, including expanding their omni-channel platform and accelerating investments in technology to enhance the customer experience. With a focus on expanding their online presence, February of this year they entered into a partnership with Capital Region Gaming, a 20-year agreement that now gives Penn access to New York's online casino and sports betting market. The move was previously speculative on Penn's part, but now has been justified by that new legislation we mentioned before with New York legalizing online sports betting. Now, the pandemic did have an impact on their revenues and earnings. For their fourth quarter of 2020, the company reported over $1.03 billion at the top line, down 23% year over year, along with an earnings per share of 7 cents per share. While revenues were down, the earnings per share compared well with the prior year's 80-cent loss. One analyst covering the stock for Rosenblatt Securities is 5-star analyst Bernie McTernan, writing that similar to our industry view, Penn is bullish on the potential for supportive legislation this year, noting a 40% market access target is reasonable, although there is still a high level of uncertainty. Given their regional footprint and relative market share in online sports betting, Penn is confident in their ability to gain entry into all new markets. For states with existing legislation, their regional footprint and Barstool's popularity in the state will be the determining factors for timing. We expect Penn to target launching in multiple states, with launches in all states with existing legislation by the NFL season. The Penn stock does have 12 current analyst ratings and comes in as a strong buy. The average price target comes in at $126 per share, which would be a 37.5% growth potential. The highest rating comes from Goldman Sachs from 8 days ago, with a price target of $158 for a 72% upside potential. Second on our list today is probably the first company you think of when it comes to online sports betting, and that is DraftKings. Trading under the ticker DKNG, they're currently priced at $57.64 per share. And they score a 10 out of 10 for an outperform on the TipRanks Smart Score. They have very bullish news sentiment, insider activity, and positive technicals. DraftKings was the first legal mobile sports betting outfit in New Jersey, starting there in 2018, and has since expanded its geographic reach and its game offers. The company allows app users to place bets on sports games, indulge in fantasy leagues, and play more traditional online casino games. DraftKings' strategy is to control their own destiny by owning and operating all of its own core technology and offering the broadest possible suite of content across any real money gaming platform in the US and creating an integrated ecosystem of consumer experiences powered by proprietary data and marketing tech. Currently, there are only 3 online sports betting operators in over 10 states, and DraftKings lives in more states than any other operator. In their most recent quarterly report, the fourth quarter of 2020, they reported 1.5 million monthly unique players, up from just over 1 million in the third quarter. Average revenue per monthly unique player was $65, and total quarterly revenue was $322 million. That total was 38% higher than had been expected. Rising user numbers and revenues prompted the company to increase its top-line guidance for 2021, boosting it from the $750 million to $850 million range to $900 million up to $1 billion, or up 18% at the midpoint. Covering the stock for Oppenheimer is analyst Jed Kelly. He notes that the company is driving strong engagement, and we see the SB Tech migration providing improved product capabilities such as same-game parlays that close the competitive gap with our other large operators. Additionally, DraftKings' updated state-level unit economics outlook implies about 800 basis points of gross margin efficiencies on the in-house tech platform migration and other efficiencies at scale. The DraftKings stock currently comes in as a moderate buy based on 20 different analyst ratings. The average price target is $74 for a 28% growth potential. The lowest price target is a hold rating from the Deutsche Bank with a downside of about 13%, with the highest price target coming from Loop Capital Markets 21 days ago with a $105 price target, which would be an 81% potential upside. And the third sports betting stock on our list today is fuboTV. Under the ticker FUBO, they're currently $20.75 per share, and come in with an outperform rating with a 9 out of 10 on the TipRanks Smart Score, with very positive TipRanks investor sentiment and bullish blogger opinions. fuboTV got its start in 2015 as a soccer streaming service, but it has since expanded and is now a sports-centric online streaming television provider, offering audiences access to all broadcasts from the major American leagues, NFL, MLB, NBA, NHL, and MLS. The service also streams international soccer along with news and network programming. They were named on the Forbes Next Billion-Dollar Startup list in 2019, and they are the live TV streaming platform with more top Nielsen-ranked sports, news, and entertainment channels for cord cutters than any other live platform, with over 548,000 paid subscribers in 2020. In 2020, their total revenue was up 83% year-over-year, with advertising revenue growing 133% and subscription revenue increasing 73%. In early March, fuboTV announced that it had secured deals in 3 states to launch its FUBO Sportsbook, an online sports betting service. The company has access in Iowa through Casino Queen and has now gained access to the New Jersey and Indiana market through an agreement with Caesars Entertainment. fuboTV expects to launch the sportsbook service in the fourth quarter of 2021, pending regulatory approval. One analyst covering the fuboTV stock for Barrington's is James Goss. He wrote that sports betting is an area of focus for management in developing a sportsbook to drive engagement and retention while creating the opportunity for additional revenues. Development of profitability and cash flow targets will take time, with progress toward achieving internal targets partly reflecting the balance management attempts to strike between growth and investment. The move into sports gambling may well be the biggest wild card in this regard, while potentially offering the greatest incremental return. The fuboTV stock does just have 7 analyst ratings, but it does come in as a strong buy. And with an average price target of $45, that would be a 118% growth potential from their current price. The lowest price target at $30 would still be a 44% growth potential. The highest comes 1 month ago from Needham, with a $60 price target for a whopping 189% upside potential. So there are 3 stocks in the online sports betting sector, an area that has some big growth ahead of it. I would love to hear from you guys what you think of these 3 stocks, or if there are any other online sports betting companies that have been catching your eye lately. So make sure to leave your thoughts in the comments down below. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. Any investment always needs to be made based on your own research and due diligence. If you made it all the way to the end here, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching, and we will see you back here next time.